a relentless run for the market now at 12,000 on the index. But, if you want to be nitpicking, it's come with poor advance decline. The market breadth has been weak. Are you getting a bit worried about that? The fact that broader market is not participating as much?
Hi, good morning. Not at this stage. I think what we are focusing on is that there is rotation within the large cap. I think the leadership has changed hands this year, obviously with corporate banks doing well, and now we've seen sectors like Telecom, some PSUs joining that. So I think what we should focus on is, instead of looking at the Nifty level and getting too excited or too worried about valuations at the broad level, I think what we should focus on is that within the Nifty and within the large caps, there are different type of stocks and sectors which are doing well, and that's the first sign. And let that continue for some time before the broader market starts to pick up. Where also I think it's a function of obviously valuations, where the valuations are now reasonable if you look at the mid cap to large cap differential. But I think ultimately the broader market comes when you have signs of economic recovery, which we have to wait and see how that pans out. I mean, I think the government is trying to do a lot of things, and there are a lot of things working. Some things will take time to work, and that is when you get a broader market rally. But I think from a base point of view, even the broader market has formed a base in terms of where the mid-cap valuations are.
Right. Morning, Rahul. Well, let me ask you about the sector of the day, sector of the week, maybe of the month, Telecom. Mutual funds are obviously underinvested in this sector, so you think that there is more catch-up in this sector?
Yeah, we like this space. We've been liking it for some time now. I think because we could see that the number of operators is coming down. And I think the Supreme Court verdict just brought it out in the open that either the sector behaves itself in terms of pricing, and the government brings down some of the exorbitant costs in terms of spectrum and so on, or a combination of the two, or otherwise, one of the operators will have to shut down. And in both these scenarios, you have the listed players, the other listed players who are profitable would gain. So really, it was a question of, in either of the scenarios, whether the industry goes down the drain in terms of the pricing behavior, and then one operator has to shut down, or the scenario which is panning out now, which is a much better scenario, that the industry starts to take up the pricing, and then government relents on some of the spectrum issues. There could be some license fee cuts. We have still not seen what relief package government comes out with. What you have to remember is that this sector has also gone through more than 8-10 years of pain in terms of increase in competition, higher spectrum costs, excessive bidding, excessively low pricing. So there are too many things which can reverse. So I think it's a sector which will become, in our view, a core sector to look at from a next 2 years point of view. So while the immediate reaction may be a little bit on the higher side, but I don't see that being a hindrance for it to become a more longer term holding from here on in the portfolios.
Rahul, good morning. So that's Telecom. The other piece of very good news the market got this week was the SR verdict. And I mean, look at the life it's inspired in PSU banks across the board. In addition, of course, SBI has good numbers. Now, this whole, talk between private sector banks versus PSUs, how are you positioned at present, and will you tilt the needle in favor of PSU banks?
Well, at least the large PSU bank, which is under question, I think we are bullish on the corporate banks in general. Now, within that, there are banks within PSU banks which are doing a better job of managing their growth, even while their NPA, the NPA cycle is following the same trend in terms of reducing NPLs and reducing credit costs. So I can't discuss specific stocks, but in general, we are positive on corporate banks in general, and the stronger PSU banks within that.
Okay, fair point. Just looking at some of the other names, IndusInd Bank is up, RBL Bank is up. So a lot of these troubled banks are seeing a bit of a buying today. HDFC Bank is soft, Kotak Bank is soft, and that's why the Bank Nifty has actually once again stepped a bit into the red. So the market's way of thinking is perhaps some of these stressed assets getting sorted. So there's a strategic play in some of these other names like IndusInd or perhaps RBL Bank. Rahul, in the auto basket, what would be the preferred bets? Because we've started to see some green shoots once again in terms of the data.
Yes, I think the inventory levels are coming down, and I think the structural issues still remain. But in terms of the inventory correction that has happened and that continues to happen, so we would prefer cars within the auto space as a segment where the inventory correction has been much more, and therefore the pickup could come in immediately. As far as the other pockets of commercial vehicles and two-wheelers, it's a mature market, so we are never going to get very high growth. But in terms of the other segments like commercial vehicles, I think we are going to be as dependent on an economic recovery as a lot of other sections of the market. So that probably will take some time. So that's how we'll divide the auto space. Instead of looking at it as one homogeneous sector, we prefer to go stock specific and look at stock specific triggers and also any segment specific things which are happening from a tactical perspective.
Okay. Well, take your point. Of course, economic growth can fire up all stocks, all sectors. But I wanted to ask you also about the current sectors which have been enjoying this flight of safety. FMCG companies, so many of them trading at 50 plus in terms of valuations, or even companies like, insurance companies. They've been enjoying the bulk of the interest of those who want to invest in finance stocks. Do you think you lay off? Are you going to bring down the weightage of these two sectors?
I think it's a function of alternatives. The reason why these valuations have come about in some of these sectors is because at 5% or 4.5% GDP growth rate, you really are not going to buy stocks which are dependent on economic cycle or or are deep value in that sense. So really from an economic cycle point of view where we are, I think this is a very natural outcome of how the economy growth rate has come down over the last 2 years. So while this whole re-rating of the growth as well as FMCG and other consumer names have been a 7-8 year process, last 2 or 3 years it has accelerated because of lack of alternatives, and I think that bit can start reversing once we start getting some kind of economic recovery, which, as I said, could take time, but I think clearly we are forming a base there. That is number one. Number two, there could be other triggers in terms of how value could start to re-rate for some of the deep value stocks, whether it's PSUs because of privatization. So there are these triggers which are developing, which could take time. Some of them could happen immediately in terms of how the privatization initiative has just taken off in the last 3 months. 3 or 4 months back, we were not even talking about privatization, and now we are discussing specific names. So there has been a forward movement on that. So that is providing some alternative. And I think the second bigger alternatives could come from broad basing of the market when the economic cycle recovers. So that is a very natural, then there will be a natural rotation, and then automatically you would see some of the valuations which you mentioned will tend to sober down.
By the way, the Bank Nifty is a minor red tinge on it now. That's because most of your large names, HDFC Bank, Axis, SBI, most of them are sort of taking it a little easy this morning. The mid-cap index has also had a minor dip into negative territory, but the selling is more pronounced in some of the consumer names like Britannia, ITC. These are the weakest links on the Nifty, at least as of now. Rahul, the other thing that sort of occupies the market's imagination and mind, obviously, is this strategic divestment. Now, how would you position yourself on some of these companies? I'm talking about the larger ones, whether it's the oil marketing companies or, I don't know, Concor or Shipping Corporation. Without getting into specific names, how do you look at the PSU universe as a whole right now?
So in fact, if you recall, a couple of months back, we wrote in our newsletter that that is a segment to watch out for, because not because it's deep value, because deep value by just being deep value doesn't mean that these stocks would move up automatically or on their own. We have seen it not happening over the last 7-8 years. So all the stocks like these need triggers, and I think strategic divestment, like I said, 3-4 months back, nobody was talking about it. So it's a huge change in the mindset of the government, that they also want to divest from a strategic route through the strategic route, rather than just doing the divestment route. And I think that's a clear shift in attitude. Even if they are not discontinuing the divestment route, I think clearly the kind of money and the kind of shortfall the government is facing on the tax revenues, very clearly, if you don't do strategic divestment, you're not going to bridge those kind of gaps. And therefore, I think it could become a recurring thing. It is not just probably 1 or 2 names this year and then nothing next year. I think this has to continue over the next 1 or 2 years, because we don't see a quick V-shaped recovery in economy and the tax revenues in any case. And government is also cannot keep cutting the expenditure just to manage the fiscal deficit, because that itself brings about new round of a slowdown. So therefore, there has to be a balance, and I think it is probably just the beginning of this process, where the government is testing waters in terms of privatizing some of these large names which you mentioned. But there could be more to come. There could be more to come in terms of monetizing surplus assets within PSUs or within the government entities. So it could take various shapes, and I think we need to just watch this space, because once this segment starts to do little better than what it has done in the last 7-8 years, there is going to be alpha creation from this segment for the portfolios.